All right. Well, we should be live here on Real Fridays. I'm Dr. Rick Rock, one of the founders of Real Fridays. Actually, Jeremy Potter, myself, and Brock Cassidy started Real Fridays about 3 years ago, and just Ross, for your benefit, the genesis of really the podcast was to focus on real talk. It was almost like talk beyond the marketing talking points that vendors or even mortgage companies tend to speak to, right? And it was to kind of peel through a lot of the rhetoric that we have in the business to get like boots on the ground, boardroom kind of insights on what's happening in the mortgage business from really serious thought leaders in the business, right? And people who are disrupting it either technically from a technology standpoint or from a lending standpoint, from product innovation or market share moves with acquisitions and that sort of thing. So this is Real Fridays, and every Friday at 12:30, we've been doing this for about 3 years, and we've gotten a lot of traction, getting tens of thousands of views often in many of our videos. So this is great. I'm excited to have you, Ross. This is the first time having you on the show here from Covered. I actually thought your name of your company was called It's Covered because that's your email address, but just covered.com.
Yeah, it's Covered technically is the URL. Fun story behind that. We did once upon a time try to buy covered.com, but Lloyd's of London laughed at me and said, call me when you have 8 to 9 figures. So for now it's covered.com, but yeah, the company is Covered, and it's an honor to be here. Thanks for having me. I'm a fan of the show and the dialogue you have, and shout out to Jeremy Potter. Love Jeremy, a good friend. So thanks for having me.
Yeah, no, I'm big fans of both of them. Both Jeremy and he was an excellent lawyer. He is an excellent lawyer, but he was an excellent thought leader within the context of or inside the walls of a mortgage company. And then and now he does a lot of consulting and works with a number of tech companies as well as lenders on various advisory kind of and strategic planning. And of course, Brock is chief revenue officer over at NewsZip. So big fans of theirs. So I know that. So you and I met. You were at the dinner that we had with Mark from Silk Title, right, in Las Vegas.
Yeah, I love Mark. Mark's a great guy. And what a fun evening to share. So
amazing.
We rubbed elbows and had a great time. So it's good to see you again.
Yeah, a guy he did not spare any expense on that dinner. It was incredible. Tell me more about your journey in the mortgage business. Like, how did you find yourself in mortgage or really in insurance and applying your services in the mortgage space? Because it seems like there's a number of these companies that are beginning to creep up into the space to sell its services to mortgage companies. Like, how did you identify it and articulate the problem you're trying to solve in partnering with lenders?
Yeah, I was a trader on Wall Street prior to starting Covered, but loved innovation. Spent my whole life coming up with ideas with my dad, my brother, whoever would dream with me. And there was a personal experience in a move where it was evident that there was an evolution of digitization of the mortgage industry and a historical kind of unbundling of the banking industry that was then swinging back towards rebundling. And so through that move and experience, my brother and I were sitting down, he was helping me shop for insurance, and kind of realized, wow, all these questions are really redundant and could be automated and streamlined. And two, if we're really trying to move the mortgage industry towards a end-to-end digital mortgage, then all of the components that go into underwriting a loan and closing the loan need to be automated as well. And insurance was the personal experience and thing that stuck out as, well, this can and should be, number one, included in the customer experience digitally, but number two, can be automated end to end as well. So we saw a great opportunity and left everything, so quit the jobs and squirreled away capital and never looked back. And so from day one, the North Star for Covered, and we were close to a decade in business here. So since day one,
Wow.
our North Star has been to make insurance easy to understand and painless to purchase, and differentiate from carriers or other agencies by creating really elegant products that are purpose built for the mortgage industry, that allow people to find the insurance they need when they need it in the experience they're already in, embedded, and not only to help them purchase the policy, but to also maintain that policy through the life cycle of home ownership. A lot of people set and forget their insurance,
Yeah,
and
yeah.
if you've done that over the last few years, you're overpaying. We've all seen these headlines of the rate increases year over year for the last few years. So it's really important in terms of all-in cost of home ownership to proactively manage your insurance as well. But most people don't like to think about their insurance and don't. So we try to help them through the purchase, but also through their home ownership life cycle, and keeping the costs low, making sure they have the best coverage at the best price at all times.
And when did you start actually pursuing the mortgage vertical? Like, been in the business a decade. At one point in time where you thought, well, gosh, this is a good channel partnership that could exist, and there's obviously a hole because there really hasn't been. It's been tried. There just hasn't really been a lot of success by insurance platforms to do it.
Yeah, well, it's complicated. It's very complicated,
Yeah.
and we've seen a lot of national scale or even smaller type carriers and agencies try to step into it that know insurance but don't know mortgage. And when you are at the confluence of those two industries, it gets very complicated quickly. You have to be a pro in mortgage to really understand how to properly deliver an experience, a compliant experience, and really solve the pains that are present throughout the mortgage life cycle. And we've seen pretty much everybody fall short. So we're hyper focused on that. It took quite a bit of time for us to become pros. We're very blessed to have some early friends and mentors and advisors, Jeremy Potter included, help us figure out the real pains and problems in the industry and navigate the complexities of regulation. Even some of our early investors are some of the guys who were part of the CFPB that wrote RESPA. And so we really tapped into network to help us build the right products that not only deliver a great experience, but also are compliant and solve real world problems for our mortgage partners. And there's some really cool case studies we have there. But we started out with the thesis, Rick, like right out of the gates, that partnering in mortgage is just a no brainer because it's a mandatory piece of borrowing a mortgage and maintaining. So right out of the gates, that was the original thesis. We were fortunate to get into a really cool real estate accelerator, Modern Ventures, and sponsors it. And we went through a whole bunch of experimentation for the first year and a half. So 2017, we got our first lender partner. We were building technology. We got into this passport program with Modern Ventures, and they were really helpful in pressure testing our hypothesis. So we went to multifamily properties. We went into title. We went and tried to dissect the various go-to-market motions that maybe we could find better product market fit. So we did spend a good 18 months in a very tactical process of finding a new entry point in the residential real estate ecosystem to deliver a solution. Ultimately, long story short, there are a few pockets where this really makes sense, where the problems really exist. Sure, you can distribute insurance through X entry point or Y entry point, but really to have a great product that people will not only buy but not want to give up. And lenders and servicers, you really have to like strike a chord of value to customer, but also business value to the lender or servicer. Through all this experimentation, we kind of figured out the API first integration thesis and the dissection of the true problems in origination and servicing. And there are many. And then insurance was not that big of an issue or contribution to all-in cost of home ownership. That equation has drastically changed over the last 3-4 years. And so I would say we've been fortunate to have a huge tailwind of a very challenging insurance market that has kind of woken the industry up to, holy cow, insurance is required, but it can also bust a deal or cause a borrower to go into delinquency. Like, there are real world problems that happen now because of insurance. So we're here to solve it.
That's amazing. I would say that I've worked with like companies like credible.com and they acquired a company called Young Alfred like years ago. Mm-hmm. And there was some challenges in implementing, the service. There was digital workflow challenges. There was challenges with just getting it to be a priority so that loan officers would say, hey, don't sell yet another product to our customer before the loan closes, or don't sell it after the loan closes because it's my customer. So that becomes kind of a territorial complexity. And then there was, and this isn't just unique to Credible. I mean, this was unique to, challenges I've heard with selectquote.com and others that become a bit of a challenge around just kind of doing some kind of a revenue share, for lack of better terms, between an organization that's not an insurance organization versus one that is, which you guys clearly are, or having the lender become an insurance agent in those states and helping them do that. I don't know. I mean, it seems as though that even some of the largest companies, I mean, I worked on these projects for, with top 10 mortgage lenders. And it was a challenge, to get these programs kind of rolled out, even though they're such an integral part of the whole mortgage life cycle. And it would seem like a very intuitive and an obvious advantage and incentive for a lender and a consumer to do this all in a singular transaction. How did you overcome those hurdles?
I would say the biggest lesson we had, which was humbling, is the enterprise sales cycle. To your point, it's such an obvious thing to do, and now in acute pain. But even still, it takes time, and there is a lot of complexity. There are a bunch of nuances to work through: the compensation structure, the RESPA considerations, the digital integrations, who owns what. And there are so many layers to this that, again, you just really have to be, how we train our team is we say you need to be a pro in insurance, and that's our job to bring to the table, but you have to be proficient in everything about our partners' businesses too. And so there are a few things that we learned that have really helped us scale, especially over the last couple of years. We've created some really strong and great strategic partnerships across some of the primary tech providers that are more or less ubiquitous across the industry. So trying to compress the enterprise sales cycle has always been a mission for us and enabling scale and growth. So, doing an integration with Blend and the strategic partnership we have there today, we're more or less able to flip the switch for any lender that is using Blend's point of sale. That takes 2 days. Right. So we've removed a ton of the friction of building, integrating, all the compliance, everything's stamped. We have several of the top 10 lenders live today. And we try to remove the friction of solving this pain, not only in origination, and Blend is just one of many examples on that side of the house, but the periphery around the technology they use as well. And what I mean by that is like insurance can cause DTI to blow up, and it does. And right now it's a
Oh yeah.
double digit cause of why loans are falling out. Like that's huge. And as an originator, you should care to solve that. You're like driving higher CAC. You could lower CAC if you prevented insurance from busting a deal. So educating the customer and integrating into various other experiences that the customer is exposed to educate them as they're going through pre-approval or
Yeah.
pre-close, et cetera. Like you can do more. And we help partners and we have integrated into the ecosystem beyond just the point of sale
But
to
like,
really help drive
what's
that.
the general adoption, would you say, from point of sale? And at what point of the point of sale are you actually introducing the insurance product to the consumer? Is it like right at origination? Is it at, execution of the LE? Is it during, underwriting? Like at what point do you actually introduce it? And then what would be a typical weather vane kind of adoption expectation?
Yeah. So we've experimented with a bunch of different entry points. And today, one of the things we're doing with partners is moving it earlier and earlier and earlier into the experience, all the way up to pre-quals at this point. If you're looking at 3 different properties, getting ready to package offers and proceed with one, you probably ought to run an insurance quote before you actually draft that offer. And we're even seeing in a lot of deals, especially in California, that they're writing contingencies about insurance into the deals now. So getting ahead of that is really important. So we're helping our lender partners kind of move earlier, pre-disclosure. And where it really starts to pick up though is after the disclosures are signed and you're moving into the closing process. We through many integrations that we see varying levels of adoption, but it's pretty baseline, around 40-50% of borrowers are electing to get quotes and see their options. And it's continuing to grow. And it's not only purchase, but it's refi too, right? We have some cool technology that helps collect policies, analyze them, and even requote them in a refi to see if we can help lower the cost of insurance. So the lender looks like a hero. Most of the time it's trying to lower the payment, right? So let's look at insurance too and see if we can pick up some savings there. So we've got a couple of experiences and a couple entry points that are driving real value.
So what would, and maybe I missed it. Did you give it like an estimation of what you'd expect to be? I mean, I imagine it depends on the entry point as far as what the expected sort of capture rate would be on the insurance side. But what do you model in for that?
It really varies.
Yeah, like plus or
It
minus.
It varies, like, I would say 30 to 50%, depending on
That's
the
pretty high.
integration, for the borrowers who are going through a flow that engage with us.
Yeah.
And then, depending on the loan type, the geography, conversion can be 20% plus.
Yep.
Yeah.
Yep. So 30 to 50% to get like an initial quote, and then maybe a 20 or 25% close rate based on the quote that's issued.
Yeah.
Because the consumers are probably, and you almost, I mean, from a lending standpoint, you want to encourage the consumers to compare, to kind of shop, make sure that they're getting the best deal. And some percentage, I imagine, still would. And at the same time, the consumer might just go with a more frictionless experience, even if it might cost a little bit more money. At least it's integrated, it's bundled, and it's something that's seamless because there's so much else going on in the transaction. You know what I mean?
Totally. Most lenders have their buddy Jake from State Farm with his khakis and as a referral partner, and we acknowledge that. But, by putting a tool, a marketplace like this into the experience, you're providing visibility, transparency, basically best execution. And we see some people still go with Jake, and that's fine. And we see a lot of people switch from Jake and come with us because, we will automatically upload the policy into the LOS and streamline that whole process. We will automatically requote every year to make sure you continue to have the best coverage at the best price. So there are a lot of reasons why, but it depends on the, loan type, purchase versus refi, or where we're at in the experience.
Interesting. No, look, I think it's great. I mean, look, to me, and I know Jeremy sees it very similarly, where it's really the companies and the vendors that end up winning are those that end up looking at the overall home ownership life cycle and the home ownership ecosystem. And as you're adding continued value, not just to the mortgage product itself, but to everything associated with the mortgage product, it becomes just better for the consumer because you can, at scale, provide additional value and incentives and various efficiencies to the consumer associated to, selling a home or buying a home or closing on the transaction, moving into the home and getting the home sort of set up to be livable or live in sort of conditions. So I love it. You ever heard of a company called Housekeeper or Homekeeper or something like that? There's a number of these services that are plugging in like insurance and different sort of services associated to the mortgage transaction. And I've kind of, there's a lot of activity in the space. Liberty Mutual is flirted with it. Mm-hmm. I would say the advantage that you guys have over the traditional insurance companies is just because traditional, you get a lot of legacy culture and a lot of legacy hurdles that they almost put in front of themselves. You'd think a company like State Farm or Liberty Mutual or something could dominate the space to some degree, but they almost can't get out of their own way. So it leaves these online platforms, which tend to be lower cost, just more comprehensive, just better user experiences, to be able to secure the right policy for their family and their home. You know what I mean?
100%. And they've tried and they have massive scale, but the reality is somebody like a State Farm or a Progressive or whoever, from a carrier standpoint, every carrier has their box, their appetite for risk. And no carrier is going to want to take on all risk of all types. And so we'll see, we have around 60 insurance carriers on our marketplace today and continue to grow it. But we'll see Travelers has a great appetite in this pocket of the United States. And then Progressive, they've got a great appetite here, and Safeco, a great appetite there. And, if you partner with a single carrier, you're really shooting yourself in the foot. They have these huge call centers. One partner that shifted over to us from a carrier said, we can never get a hold of anybody if we have a problem with the loan. And oftentimes, the close date shifts. So then you have to update the insurance policy to reflect that effective date. And then you got to call into a giant call center and you can't get a hold of anybody. So, there are some inherent challenges with the model that they have, the carriers, but when you aggregate them together in a marketplace, you've got magic for the customer, because then you can get the benefit of Travelers in this area, Safeco in that area, Progressive over here, et cetera. And furthermore, RESPA is really the governing throttle for carriers to even participate in the origination market. You have to have multiple quotes. You have to provide choice, right?
Yeah. Yeah, no, I agree. And at the end of the day, relationships and combined with just efficiency, I get my groceries at the local convenience store, not because it's the cheapest, it's because it's the closest and I don't have to go that far from my house. Right. Mm-hmm. And that's a conscious decision that I'm making. I love it. I think there's a big opportunity. I think there's a great opportunity for NFM. I'd love to get the right audience in place to be able to evaluate this, much more seriously.
Let's do it. Let's do it.
No, honestly, because the biggest thing that I think that any company, whether it's NFM or others, is just going to be a matter of scope and time and attention, right? Because there's always other priorities at stake, right? And making a few $100,000 a year tends to be almost glossed over in lieu of just doing extra loan volume to replace that. And that's where it's not really, it's in part about the money, but it's much more about the consumer experience. And if you focus on the consumer experience and just better serving the client and providing the consumer a better flow around the quote unquote transaction of getting a mortgage, the money almost becomes secondary. And to some degree it should be, because it's all gravy anyways. You're not making any money at that stage. So why not just add an additional value add to be able to just improve the experience of the consumer?
I think that is exactly what most of the industry has gotten wrong. And insurance is such an obvious ancillary revenue source.
Yeah.
But what if I told you or any lender out there that we could improve the conversion, reduce your CAC, help the pull through, and deliver a better experience? The cost savings could potentially even materially outweigh whatever revenue we could share.
Yeah.
And even more so on the servicing side, right? What if I could tell a servicer that we can reduce the number of borrowers enrolled in LPI, a really negative experience that causes borrowers to go elsewhere when they decide to refi? What if we could say, the amount of issues and defects and risk posed that are non-GSE compliant with underinsured, et cetera, what if we could cure the risk in the portfolio and the compliance of the portfolio while also deflecting the number one call that you get that drives cost in the call center, which is, why'd my payment go up? Guess what? It's because of insurance and tax, but primarily insurance. So what if we could deliver all of these needle moving business unit KPI metrics and measure that against the revenue that we can provide too, which is more valuable? And I think that's where most who have tried to do this have got it wrong. They see the industry as a sales channel, not as a partnership channel.
Yeah.
And we really tried to flip that upside down and figure out how can we drive more value to the partner by way of moving the needle on some of these operating metrics. And the team has some great case studies on that. Now, like, obviously we're going to provide and split revenue with partners and, make everybody happy here. But if we can move the needle on real cost centers or business metrics, like, that's where we win together. And that to me is really exciting.
No, I love it. No, I agree with you. And I think that's where kind of the alignment. I mean, I think you have to have some scale. Otherwise, I think maybe to smaller organizations, it might be a bit of a distraction. But I would say that to most mid-sized to large enterprises, this really is kind of a no-brainer. And I might be selling the small to mid-sized companies short by saying it might be a distraction, but I do think in any event, it's a massive uptick in convenience for the consumer to be able to present this to them,
100%. Well, those small enterprises, right? They're going to be more cash strapped and more disciplined in prioritization. And that's where some of these pre-built integrations are just critical, right? Like the blend integrations, CRM integrations, et cetera. Having a flip the switch turnkey solution, we can help them too. We may not be able to go as deeper in the stack for solving the breadth of the business KPIs, but we can definitely turnkey, flip the switch, and add value to the borrower experience across the life cycle. So we're not counting anybody out. We're trying to help everybody.
No, I love it. I think that we definitely need to set up some discussions with NFM for sure. And because we have our own POS, Christos is really one of the most innovative CIOs I've worked with, in the business, and he's really very innovative and organically building new solutions that are very custom to NFM, but also provide kind of unique value. We have a POS that spans across dozens and dozens of languages, from Hmong to Vietnamese to Chinese to German to really any language that's sort of spoken. It's amazing what he's been able to do to be able to accommodate different constituencies and for loan officers that join the organization. So be able to add something like this through that experience, I think would be a real solid start in building a more of a home ownership ecosystem.
What a gift to the LOs in your organization to have high caliber talent like that, and homegrown solutions is such a blessing to LOs. And I think that's great that you guys invest in that. And I'd love to whiteboard and chop it up and see what we can do as an innovation partner.
And where are you headquartered?
We're headquartered in Denver. We're a distributed
team,
but we have our primary headquarters in Denver.
And then what's your head count for staff? How have you grown over the last decade or so?
Today we're around 130, 140 full-time. Everybody's US based, onshore. Everybody's, we've got our licensed agency that we run and our service team all in-house, but distributed. So we've had great partnerships and great capital sponsors to help us grow this business, and it's an exciting time.
I love it. Well, I'd love to set something up, and what I'll do is I'll make sure that when I close off this interview portion here, I'll make the video accessible to you and your team. Cool. Typically, we can split this up into different reels and stuff where you can post on Instagram or on LinkedIn, and I think it could be of some value.
I appreciate that. So I appreciate that, and I'm excited to chop it up with you and see what we can do with your organization, and it'd be fun. I'd
agreed. Are you going to the IMB conference in?
I'm scheduled to go. We have team that'll be out there. So, will you be there?
Yeah, I'm going to be there, and our CEO will be there, our president will be there, and our head of operations, our head of strategy will be there. So it may not be a bad opportunity to just grab a beer and just kind of, mind share a little bit about how we could do this. But I think it'd be great. It'd be great to meet up with your team.
That sounds great. Count me in. Let's do it.
Good deal. Well, Ross, I appreciate you joining us here on Real Fridays, and I'm looking forward to sharing this video to you and your team. It's live, so you'll get, I'm sure, some feedback here, from this recording.
Dr. Rick, you're the man. It's an honor. I appreciate you inviting me on today, and congrats on the growth of the platform that you have here, and also with the organization at NFM. So,
thank you, man. Looking forward to it. Talk to you soon.
Talk soon. Thanks.
Bye.